Welcome everybody to the April 2024 WITI LinkSV partner event, where we go through where the money went last quarter or last month, but maybe now since it's April, go through a little bit about the quarter and the start of the year. Don, thank you and Bob for all the great info I've been getting in the newsletters, and especially this month. I was really looking forward to the meetings. It seemed like good news. Over to you.
Thank you so much, David. And yes, March was a crazy month. Um, $1 billion in investments, $1 billion in acquisitions, even $1 billion IPO. So that's what we'll dig into here. So let's get started. I can't even look at this number with a straight face. So 50.3 billion to 161 companies. Largest number we've ever recorded. It contains the largest single private market funding ever done. And that, of course, was OpenAI, and we'll break into that a little bit more. But 40 billion of that went to one company, OpenAI. The 10.3 that remained went to 160 other companies. And you can just take a look. We're one quarter in. So we've recorded now a total of just under 70 million in fundings. Last year, 70 billion, that's a B, in fundings. Last year, the entire year was 90 billion, 53 billion, and the very dry year before that. And even back in 2021, the year of irrational exuberance, total fundings then were only 123 billion. So it seems we're well on our way to a much higher funding year than last year, at least for select companies and AI. Sidebar on that. So let's take a look now at a little bit more detail. In the graphs today, I've pretty much omitted OpenAI's 40 billion because with it included, you've basically just got a big pie of AI with a very tiny sliver of everything else. So let's look at, aside from OpenAI's 40 billion, what else there was. We had a surprising number, 14 mega deals this year. We'll get to those, or this month, and we'll get to those in a moment. But overall, you can see that AI took up the lion's share of the funding. And a lot of these are big fundings, mega deals. We did see more clean tech than usual. We also saw biotech, and that 1.1 billion in software can be traced back to, again, AI, either native or enabled applications. That's where the money's going. The 870 fintech is, again, exhibiting a resurgence. There's much more interest in both the early stage fintech as well as several very large later stage. And these go across the board. The fintech is payment companies. It is e-commerce payment companies. It is, if you look at the whole accounting arena, a variety of companies in there who are taking their apps, making them AI enabled. There are new companies coming up with AI native. Again, all around managing numbers. And last but not least, that 1 billion there, social network, that's our old friend X, formerly known as Twitter. Finally got in a new round of funding, and Elon got back much of the money he borrowed to put in and buy it. So let's now, out of this entire month of funding, And again, let's break that down. 50.3 billion. So 10.3 billion is the rest of the funding. And out of that, 7.8 of it went out in mega deals. And for anyone new, a mega deal is a funding of more than 100 million to a single company. Well, it should be no surprise that over on the left of the display, we've got a lot of AI companies. And you can break this down this month at least into largely foundation models. That's your OpenAI, your Anthropic, your Safe Superintelligence, Turing, and Nextop. Celestial is the hardware side of things. The compute, I won't say hardware, compute. And interestingly enough, on the compute side, we saw 3 new companies that reported no funding, but are starting cloud compute exchanges, if you will. There's funding there someplace, but they're not reporting it publicly.
Huh.
A lot of money going into the compute side of AI. And it's worth noting on that OpenAI 40 billion, 18 to 20 billion is going into the Stargate project, which is a consortium of AI companies announced by Trump 2 months ago, just after he took office. And that consortium is all about building data centers, all about providing additional compute capability around the country. Their first installations, I believe, are in Texas, but it's a multi-year plan, multi-year, multi-facility, multi-billions. And 18 at least
Huh.
OpenAIs is going to that. And then you figure the remainder of the OpenAI 20 billion, likely more than half of that will go to compute, which is another way that AI has substantially changed the funding arena. It used to be the rule of thumb was you get a funding and half of that money goes to people. That's not true anymore. It's downwards of 25% if it's an AI company and if they're doing the level of LLM and foundation models that most of these companies are. So that is the AI side of things. We also had some clean tech, Terabase and also. And we're seeing multiple companies now who have moved past the seed stage in robotics and humanoid bots. There's 2 groups of these. One is literally the humanoid robots. The other is household robots, tool and task robots. But all of them are embedding AI. So again, it's AI spilling over. The bot company got their Series A, 150 million to begin rolling out their first bots. And Superior Medical was the only biotech mega deal this month, which is surprising. We usually get multiple of those. Past that, we saw Mercury and Walrus Foundation, both fintechs. Walrus Foundation for crypto followers in the crowd. Walrus Foundation is a crypto Web3. Another, again, blockchain based for handling a variety of payments and protocols. Well, this was a very pleasant number to come across this month. So women-led companies in our numbers here, again, I'm taking out the 40 billion from OpenAI, reducing it to 10.3. We actually had 1.2 billion going into women-led companies this month. And that is largely the 1 billion that went into X, because the CEO there, Linda Yaccarino, runs it. Past that, we had a variety of other mid-sized fundings. And this number would have been, it could have been twice what it is, had Mira Murati either closed or disclosed, and we're still not sure which one, the funding on her new startup called Thinking Labs. If the name Mira Murati isn't familiar, this is the lady who was the CTO at OpenAI when Sam Altman was fired. She took over, he came back, she stayed around for a while. She's off now, like many of the other OpenAI execs, starting her own company. And she has pulled a number of really well-known names, including people from OpenAI. Word is she's raising $2 billion, but doesn't want to close it or hasn't closed it. So we may find next month that's another big number. I just want to come back to this. I had this up last month, and again, the money that is going into capital spending around AI is, I could say off the charts, but it's now become standard, at least for the top four, your Meta, your Alphabet, Microsoft, and Amazon. And it's continuing to show up in most arenas, even though there's now a drumbeat, and really Microsoft is probably leading the way on this, movement towards small models. Movement towards models that require less training, less money, less cost. Open source, in particular, is also pushing this trend. But nobody's cutting back on their CapEx spend. Nobody's cutting back on the data centers they're building, on the money they're putting into the variety of resources they would need in the larger models, in building the foundation models that have thus far led the way. And VC fundraising is taking, I won't say resurgence, we're not there yet, but we saw double the VCs announcing either new funds or that they're raising a new fund in the last month than, actually in the last quarter, than in the previous quarter. Election has something to do with it. The uncertainty of election looming over things definitely slowed things down. Having that out of the way has brought people back to the table.
Glad all the uncertainties over, Don.
Well, there's a new level of uncertainty, David. And we'll talk about that in just a minute, but yes, quite so. But we did see new funds coming up. As a matter of fact, just in the first week of April, and we'll talk about this next month, but in the first week of April, there were 5 new funds announced and another 6 in which VCs announced, reported, they were reported to be raising. And we get that through filings with the SEC because they don't talk about it at this point. But anyways, there is more money going back into the coffers to be handed out to select companies. So this was the money going outside of things. And it was a remarkable month. The second week of the month, there were literally 7.9 billion in acquisitions. The next week, 10.9 billion. And of course, week 4, XAI and X eclipsed everything with their 45 billion. Now, out of this, 2/3 is on paper. In other words, it's a stock swap or stock issue. There were a few of these that were cash that will go back into people's, the VCs, their LPs, the early employees, when they close, probably in the next 2 quarters. But this is the first infusion of acquisitions that we've seen, significant acquisitions that we've seen in a long time. And it follows it follows a year in which the majority of acquisitions we saw were amounts undisclosed. If an amount's undisclosed, it's not a sure thing, but it's likely no one wants to talk about it. It could be because the company's run out of other alternatives, and selling to a competitor, a partner, is their only outlet. And we're still sitting at 760 unicorns in the United States to almost $3 trillion in value that needs to, in order for liquidity to come back, for us to get back to a better funding environment, a better all-around environment, that has to change. The IPO market, CoreWeave went out, and CoreWeave was highly anticipated. I'm sorry, CoreWeave is it's a compute company back in New Jersey. It's not ours. It's not a Silicon Valley company, but because it was the first AI IPO in 2025, we were watching it. Unfortunately, the expectations were low. And even though they did a successful, I think it was 1.5 billion in proceeds, it was about only 2/3 of what they had hoped to pull. They had to lower their offering price. They had to lower the number of shares that were out there. Now, having said that, looking this week, their price is going up. So we'll see how that trends.
Well, they announced a big deal with NVIDIA. I'm assuming at GT, whatever their conference was, GTC.
GTC and NVIDIA, yeah, they did. They did. Um,
Nice. Yeah, because they
and of
hadn't been
course,
on my radar.
they had the deal that they announced also with OpenAI, the 18, turns out to have been Microsoft not opting into a contract that they had with CoreWeave. And with that availability, OpenAI stepping in and grabbing the entire thing. So the next marker for the IPO market will be Cerberus. Now, Cerberus is a hardware company. They do chips that are optimized just for AI. They were supposed to go to the IPO market last fall, but one of their customers, one of their large customers, is a company out of Dubai, and it brought up lots of security concerns. Apparently, they just came to a deal with that company that any shares that that company buys in CoreWeave will be non-voting shares, and that took away the national security concerns. So they're expected to, in the next month, 6 weeks, actually take their IPO out. And finally, because we aren't getting the traditional exits, we're not getting the level of acquisitions that we've seen in the past, secondary sales are booming. This is when a company, rather than going out on the IPO market, but needing capital, either for themselves for growth or for employees who want some liquidity, or investors, early investors who want some liquidity. In a secondary sale, all four of these companies have, as a matter of fact, Plaid just now finished their secondary sale, 575 million. And the benefit of these secondary sales is it takes the pressure off the companies to go public. Employees get some money in their pockets, early investors get some money in, new investors get to come in. But it's a sea change in the market. It very much affects how the current investors are looking at their portfolios, giving money back to their LPs, and the investors are also the ones who are driving these secondary sales. And there's also a private secondary sale market. Aside from these big deals, there are companies booming to enable you to buy shares in almost any privately held company in which the management will assent to shares being sold. So now with all of this in place, we've got some new uncertainty, and that's around tariffs. So taking just a quick overview on that, most of the startups that are SaaS software, their costs are not going to go up. They will not be affected for cost basis by the tariffs. On the other hand, particularly those that are consumer driven, will likely be. So, mixed feedback coming from investors, from startups on this. Everybody's sort of holding their breath, but expecting overall economy to slow down, and as a result, sales, that sort of waterfalls down, and sales revenue growth for startups in those arenas to slow down. And a quick look at the IPO market and where things are. Again, it's just notable that the companies that have green ups are all AI related. Those are the companies that are doing well. However, so noted that those companies have also taken a bump down, with the market being really hit by the tariffs. They're up, but they're not up as much as they were. Example in case, Reddit a month ago was up 325%. Now they're up, but 185%. So we will keep an eye on this. And all these numbers we pull from our research on the Pulse, Bob and I, and that Pulse comes out weekdays, reports on new fundings, on mergers and acquisitions, on IPOs, and on executives moving between companies, and investors moving between investment firms and moving between companies sometimes. All good data. Everything that goes into our database and into the Pulse is researched. It is curated information that you can be sure of. It's got everything you need to take action. And if you'd like to know more, just head over to our website. You can get a 2-week free trial. We have an accelerator program, and if any of you are associated with an accelerator, if our data can be helpful to the accelerator and to its participants, we provide it at no charge to those participants while they're in the program. We've got a variety of fundraising assists, and for the entrepreneurs in the audience, you can get everything in our $50 package for just $7. We want to do everything we can to support and help you on your journey. And David, I had to move our next session to the 9th of May. The 2nd is just not enough time to pull everything together. So at any rate, I will turn things back over to you, and thank you everyone for your time and attention.
I figured the cycle would be tight. Thank you, Don. Great news, and hopefully we'll continue that way. Before we go into breakout rooms, does anybody have any questions or comments or anything they'd like to share? Anyone?
Okay.
No, great information as always. Thank you.
Thank you. We'll do breakout rooms now for just create them. Yeah, just get to know each other, connect with each other. We'll go 10 minutes, and we'll see everybody shortly.